Shares of Redfin surging today, finishing the day up 22% on the back of last night's earnings. The move comes as mortgage rates sit near multi-decade highs, and after a ruling this week in Missouri found that realtors were liable for inflating commissions, sending shares of many online brokers lower. But joining us now is Redfin CEO Glenn Kelman. Glenn, it's great to have you back on the show. I do want to start with earnings because the market really liked what you put up in terms of profitability and your adjusted EBITDA. A lot of focus on cost cutting over the last couple of quarters, and it really seems to be coming to fruition. I guess walk me through the quarter and how this positions you not only for the rest of the year, but beyond.
Oh, well, thanks for asking. So we improved adjusted EBITDA by $59 million, which is a hefty amount for a quarterly profit. Last year, we were running big losses from Redfin Now, and we've just really focused our business on taking share from other brokers. That's the other side of this, that we grew share sequentially after having failed to do so through the first half of the year. So getting back to growth on a lower cost basis means that almost every dollar of incremental revenue can drop to the bottom line. Brokers are also just competing more fiercely than ever, so we launched this all-variable pay plan in California, which we think will let us recruit top-producing agents in addition to the ones we already have. So that was something that analysts were really interested in, too.
I do want to dig a little deeper into this idea of broker competition and specifically commission and what that structure could potentially look like. We did have this ruling earlier this week. Stocks reacted to it, including Redfin. It's unclear quite what this ruling is how it's going to play out in terms of future regulation. Your expectations and what it means for Redfin.
Well, there's two possible outcomes from this verdict. One, reform, the second, revolution. I think most of the industry thinks that only modest reform is possible. Redfin has felt that a more revolutionary outcome is still possible, too. We have 100 years of cooperation between buyers and sellers agents, and yet both this verdict and the Department of Justice seem intent on ending that cooperation. In most places outside the United States, there is only one agent handling a real estate sale instead of two. That is a trend that has already strengthened here in the United States just because there's such low inventory. So many listing agents try to get two customers on every listing by offering to represent the buyer of that listing, not just the seller. So that's something that's been increasing for the past couple of years. And I think that trend is only going in one direction.
Glenn, even though inventories are low, as you guys have acknowledged, sellers are dropping prices. Rents in the apartment arena are flattening on growing supply. And you guys have said, I believe on the conference call, that if there's not a strong start to the spring season, you're prepared to cut not only marketing, but people. Should we be bracing for a real slowdown potentially in the real estate market in 2024?
Well, we didn't talk about cutting people in the first quarter. We did talk about deferring media expense. I just want to be careful about that, especially since some employees may be listening to the call. We think that we're near rock bottom in terms of sales volume. So we're going to expect that just as 2023 is ending with a whimper, we'll go into 2024 with the same expectation. One change, though, in the past few weeks, we've seen more listings come online and inventory is starting to pile up. We've had more price cuts than at any point since 2015. You always get price cuts in the fall because people who didn't sell their houses in the summer start to mark their listings down. But it's just happening more. And I actually see that as a welcome development because for so long, American homes have been unaffordable. We're now at a 4-decade low. The reason we can't get a break in home sales is because nobody can afford to buy the dang house. And so getting some softening in prices, I think, is usually how a correction works its way through the system.
I guess it's, the difference between some softening and a lot. It depends what happens in supply. I saw an analyst note say that you were looking at taking actions on personnel spending. Maybe I misinterpreted that, or they did. What are some ways beyond marketing that you're prepared to save on the bottom line?
Well, we're not going to be traveling any. We had a bunch of expenses related to an annual sales kickoff. There's obviously the media that we were going to run in the first quarter that we're more likely to run in the second. There's all sorts of discretionary expenses that we'll defer. And then there's backfills. So I think the difference between a layoff and just not allowing people to hire replacements is still meaningful to us because we just want to make sure most of the people at Redfin who have jobs keep them.